So I wanted just to really talk a little bit about my calls that I have with a new private money investors and real estate investors, and just kind of give you some information on things that we constantly hear, some FAQs and responses. So the biggest thing that I get right now is second lien position, that people want to be in a first lien position. First and foremost, the difference, and let me tell you what that means. When you actually want to secure a loan and you want to be a lender to myself, for example, a borrower, you are, instead of just handing me money and lending me money, and let's just say, hey, on a handshake, you'll be backed with real estate with collateral. So you typically will have you will need, if you're ever doing a loan, you should have 3 documents, which is a promissory note, insurance, and a deed of trust. So a deed of trust is where it's going to show the collateral and it's going to attach it to a property that I own or that's in my portfolio, so that if I default for whatever reason, you can go ahead and foreclose on that property, get your money back, and probably then some, because that's typically what that document is. So a lot of people are like, I want to be first lien position, because everything, as you hear, first lien position, second lien position, and sometimes there's a third lien position, is the way people get paid on their money. Here's the thing, guys, you can't be a first lien position with $30,000 to $50,000 to invest. Typically, first lien positions are mortgage lenders, true traditional or conventional mortgage lenders. They're going to be your hard money lenders, so these big guys that can come up with giving you up to 90% of purchase price. So 90, so let's just do the math, 200,000, they'll be able to give you 180,000 of it. So 180,000, and then we usually look for the additional money for a second lien, which is typically when you're first starting out, where you're going to be. So a lot of people want to be in that first lien position, but honestly, unless you have that type of money, you are going to typically fall into a second lien position. With it being a second lien position, you're still protected. So I think that's kind of the myth, is people don't think you're protected. You're protected by the asset. And just like anything, guys, if you have to call your part of the loan due because you become a mortgagee, it does a domino effect to advise the first lien position that there was a lien on the property and in a second position, and then it will trigger the first lien position. So then the first lien position is going to say, well, hey, there's a second lien. They're coming after their money. Now let's go ahead and let's come after our money as well. So you're still protected. I want to just really emphasize on that. A lot of people are hung up, I want to be in first lien position. Can't be in first lien position if you don't, or if you're not going to actually be giving me 80% of what the loan to value is, of what the house is worth. So I just wanted to kind of give some of that information, give you some insight on that. Hopefully that helps. Again, there's times that we speak to others and they, you don't know what you don't know, and we try to educate as much as we can so that you understand as well. But do understand that being protected by an asset is protecting you, right? So it's better than just a handshake and, hey, Michelle, I'm gonna lend you money. Hopefully, cross my fingers, you'll give it back to me. You actually have it's a secured loan, not an unsecured loan. Hope that helps. Thanks so much. If you want more information like this, please like, follow, share below. I would love to send out some more content on this and being able to give you guys more tidbits about how to be a real estate investor. And we're gonna be giving a couple of more longer videos to really get you some information on that. Thanks.